Welcome to the ReachX podcast. Today we are with Neil Johnson, who is an Executive Director and Chief Executive Officer at Duke Royalty. Welcome to the podcast, sir. Let me jump straight on to the first question. To those investors who are unfamiliar with your brand and your business, could you sum up the royalties model for us and what potential returns it could offer to investors?
Sure, thank you. Yeah, the royalty model actually has been around for decades, but we are the only UK-listed company that has royalties for non-resource. So your listeners may know oil and gas and mining. That's where it started 30 years ago. And it's a non-dilutive financing solution that also does not carry refinancing risk. So it really has a benefit to private owners, business owners that want capital but want to retain control of their business. So you can see it like or imagine like a corporate mortgage. Just like your house, you go to the bank and get a lump sum to purchase your house. We want acquisition financing and other things, and what we do is we have a 30-year agreement that you're paying down your principal as well as an interest back to Duke, and just like your home mortgage, you don't have to live in your house for 30 years. You can. There is a buyout mechanism, but it doesn't carry that refinancing risk of debt. And so, as I said, this has been deployed for decades in the public company sector in North America, and it provides investors with, because we're not a fund, we're a public company with a fixed cost base. We provide income as well as, because we pay a quarterly dividend, as well as capital growth, because every time we deploy more and more capital, it's accretive to the shareholders, and with our fixed cost base. So it's operational leverage, it's a quarterly dividend, and that will empirically over decades that has proven every year there's a capital growth element on average.
Sure. Now it begs to ask the question, if I may use the expression, you're kind of importing a model of alternative finance. So what are your expectations of the concept gaining traction in Europe and in UK in particular?
Right. Well, we're really pleased that I spotted this opportunity, being a Canadian but living and heading Canaccord Genuity for 10 years in the City of London, and this is a kind of a Canadian invention. Coming over to the UK, we've already had 12 different royalty partners from Europe that we have contracted with. So it is a challenge to get the word out because we are the only ones active in Europe. But because of the structural changes in the banking legislation from the global financial crisis, there is a funding gap for and a major multi-billion-dollar opportunity for alternative financing that the banks don't service now. And so we are really excited about the big opportunity we have in the UK and Europe.
You quite recently announced the acquisition of Capital Step Holdings Limited. Given it's so recent, it's only happened in February 2019, it's worth asking you, what kind of business synergies are you hoping to achieve, and what are your expectations from this acquisition?
Well, very good question. The Capital Step guys started around the same time we did in London. We actually know Rael and Jonathan, and we are the public company and they were the private company. We have combined forces. We've kept their partners, their employees, and really combined forces to have a unified product out for UK and Europe. What that does for us is it diversifies our portfolio, which is very important. So we have now 12 different revenue sources. It expands our origination reach and our brand and our ability to service more and more of our small businesses, and also has more people and with experience for inside our company that really can leverage now the team that we have, which is 9 people. We can leverage that and have a multiple of capital under our control with the same amount of people. So the operational leverage is going to kick in.
What would the combined portfolio look like for starters? And then secondly, looking ahead, what kind of sectors really are the kind of sectors that you're really interested in?
Yeah, our portfolio has 12 different royalty partners, as I mentioned, and they are in Ireland, in Netherlands, in the UK. We have some Canadian content in there as well, and so we have a broad. Not any one partner is more than 15% of our revenue, so it's a nice broadly spread revenue base. Also through geographies and also currencies, it's spread. In terms of the sectors, we are non-resource, so we're not tied to any commodity price, and we're looking at a variety of sectors: business services sectors, industrial companies, healthcare services companies, and other companies. But they have to be around for a long time. We're looking for profitable private businesses that have a demonstrated track record of profitability that the owners do not want to sell. And so we go in and back management for whether it's an acquisition or growth capital or debt refinancing or shareholder refinancing or the shareholder, different shareholders. So we that's kind of what we're looking for. We're kind of sector agnostic, but when we have the situation and we have the right profile of company and the profitability and the long-standing history, that's what we're looking for.
I must ask you this question. There are some macroeconomic complications on the horizon. There, some people say that the global economy is facing a bit of a cloud. How does that sort of, if it does, transfer over to your part of the world? And of course, what kind of short-term challenges do you see on the horizon?
Yeah, it's a good question. I guess you're referring to the B word, Brexit. We're here in late March, so it's anyone's guess of how that's going to affect us. I mean, I think like every company, there is a wide variety of different challenges with Brexit. However, as I said, we're geographically spread, we're currency spread, so we're not reliant on any one event or country. So I think that insulates us. We do have exposure to British small British industrial companies, so there may be some some effect, but here's what I'm going to say is that our ability, our revenue is dependent on the revenue of these companies and the growth in the revenue and not the profitability. So we're not taking profits. We don't own these companies. We're not taking profit. We actually take a percentage of the top line. So therefore, we're insulated from any earnings impact of these companies. Sure. And yeah, that's basically what I would say about the short-term challenges.
Sure. And finally, to round up our discussions, you've been in the public eye. A lot of these since 2015, a lot of these investing magazines and portals often cite you among fast-growing small caps. So for our listeners, it's worth asking this question. Nobody has a crystal ball. I won't ask you for a 10, 20-year projection, but just for the short to medium term, if you're looking at the next 3 to 5 years, what can we expect from Duke Royalty?
Right. Well, I would say that our business model benefits existing shareholders with additional capital, because when we have more capital, the existing shareholders win because it's going to be invested in accretive nature. So we get 13 to 14% returns, and we pay out a 7% dividend. So with our fixed cost base, because we're salaried employees, any more capital gets deployed is accretive to the existing shareholders. That's where the capital growth comes into the model, because we will be able to increase our dividend. We have our comparables in North America that are doing North American deals. They've increased their dividend 11 consecutive times in the case of the biggest one. So that's what we're planning to do. We have great shareholders in our institutions, very household names in BlackRock, GLG Partners, Henderson, AXA, Canaccord Genuity, Hargreave Hale, and the list goes on. So the Capital Group. So we do have a great shareholder base that have given us £80 million to date in equity capital. In the 3-year view, we believe that we can double or triple that. So we continue to move the needle on both the investments, the number of investments, which reduces the risk, the amount of capital that we have, which then allows us to accretively get cash flow per share. So we then increase the dividend, and then finally doing things like this, getting out there and showing our business model, which is an annuity-like business, annuity-like cash flow stream, high visibility on these companies, and getting out there to the individual investors to show them the business model and how it works, and the income that they can get from it.
Thank you very much for your time, sir.